Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. I can't believe we are already here. Well, I can and I can't. Normally, I do these updates every few days, and it's only been about 8 hours since I did the last update, and a lot has happened in the past 8 hours. And I've been posting about it. I'm on very limited sleep. Thank God for coffee. And so I just want you to just bear through it. I may be a little bit, foggy, and I'm also working on a scalp trade at the moment. So you might hear some bells and whistles going off. I might have to pause the video so that I could exit my positions. I can start scaling them out of my position. So I'm going to be watching the monitors, the above overhead monitors for that as well. So I may seem a little distracted, but it's not because of anything other than that, guys. So let's review a little bit, just a quick recap of what we talked about and some of the levels that we were looking to break. So I'm going to take two things off our chart only because they don't apply quite yet, being that we're continuing with this bullish push because of the incredible amount of short positions that are opening up, even as we speak, even as people are getting liquidated. They are opening massive positions. You're talking about 180, $300 million short contracts. So obviously, market makers are going to go after those before continuing down. I think people have the misconception that it can't go any higher. These guys have all the liquidity. They have all the money. They can push it as high as they want. The whales are not going to tell the market makers what to do. Market makers, guys, are the exchanges. They're the ones who hold all the cards. They're the ones who know your wallets. They know your habits. They don't have someone looking at your wallets. They have something smarter. They have algorithms looking at your wallet. They have a behavioral models that they can use to counter trade you. And that's what they do all day. So there's no person sitting in an office looking at you, looking at your orders, trying to trade against you. It's something much scarier than that. And with the integration of AI, as we're seeing through everything, it's only going to get scarier. So you want to make sure, guys, that you try to put yourself in a position where you can make some money, but just don't get a little too ahead of yourself because you are playing in much bigger waters. All right, so let's see here. I'm going to do this. I'm going to remove this just to clear up the chart. I'm going to remove this reload zone for now. It's not applicable to what we're going to talk about because we invalidated some levels. So before I talk about those invalidations, I just want to clean up the chart just a little bit. Here's my continuation rule. Okay, so this and this one here, we're going to get rid of this one for right now. Okay, perfect. So do you guys recall? Let me go to the 12-hour time frame. All right, you guys recall the lower high rule. The lower high rule here we had put in place because we were down. I think we were down here somewhere, and we had a couple of areas that we were concerned about, that we were looking for. Not concerned, but better said, we were looking at the lower high rule, 618, 706, 786, to give us that top. But before we did that, we had to break through this resistance line here area. So this was the top of the market at 31,000. Then we back tested this area. I even went to the 4-hour time frame to give you a little zoom in on how well this was respected. And we were wanting to see if the diagonal trend line and the horizontal 706, like we did here with 706, creating this lower high, if this would be a point of concern, maybe a pause, and then a pullback. And that's where we had the reload and continuation rule fibs in place, which I just finished removing. The fact that we broke through this here, I'm going to say that we're going, this candle has 2 hours. Could this candle body close at 786, which is the extreme? That's why it's in red, because it rarely happens. This is more common. This is sometimes. This is rarely. However, just to cover my butt, because I don't want to put them to say, hey, we did go down after here. I just want to tell you that very rarely it happens. Now, when we break through something like this, we can't say it's invalidated until the candle body closes on or below. Any close above it, it's invalidated. We all have to have our invalidation areas, and that's mine. For now, look, because of the data that I see online, I'm gonna say it's less likely that this is gonna happen, and we're gonna continue. So I'm going to remove this lower high rule off of here. And we're going to look at a couple of things. We're going to look at first, remember this trend line here. This was, let me just refresh your memory. Let me go to the higher time frames because it'll be a little bit cleaner. I'm going to go to my go-to. I love the 12 hour. 12 hours is my go-to. So I just want to show you. Yeah, and of course we had deviations. Actually, no, never mind. We're going to go into here. We're going to zoom this here, and this will give us a little bit better of a view on here. There we go. All right, so we had this really nice diagonal trend line that we drew. I think this was the first line we drew yesterday in the video, just to give us a little bit of context of what was going on with the price action, showing that move, that climb, the deviations we had here. Now, look where we were here. Does it mean that we're going to go back down to new lows? No, it just simply means that we're approaching a very strong area of resistance. And the reason I say it's strong, because of the amount of touches as support. The more support a line has, whether it's diagonal, horizontal, a lot of people don't like diagonals, and that's okay. I use them because, look, I mean, they're not the one all say all, but they help me at least visualize what is going on inside of this area here. And what I'm going to do now is I'm going to go ahead and remove this. I'm trying to create less clutter on my chart. So this one, since we broke through it, it's not applicable as much right now. It may be in the future, depending on how high we go. When we come down, we may test that as support, since this was a resistance, and at a later time we'll go ahead and put it on. I just try, for the sake of these videos, not clutter the chart with unnecessary lines, just so it doesn't get too busy and too confusing. So for right now, I'm going to focus just on this line right here. We're seeing that rejection here. Now, is it touching it exactly? No. And again, none of these things are going to be an exact. It's a realm, just like some of these wicks pointed to came through, pierced through, but the context of this area was still support. Here, we're getting, I consider this a rejection. Does it mean we're going back down? No. Just like we invalidated the lower high rule, just like we invalidated the diagonal resistance line, these areas need time to play out. This particular candle has 10 hours to go. A lot can happen inside of this 10-hour candle that we can still, look, let me show you something real quick here. When we came through here, when we found resistance on the daily time frame here on this line, look how many, it took one rejection, then 2, 3, 4, on the fifth day. On the fifth day, this pushed up higher. So we barely hit it. Just, I don't know, an hour ago or so. When I woke up, I saw that candle. So it had just happened when I woke up. All right, so this is our next point that we're going to be looking at. Now, we've got a couple of things that I'm looking at. Not only do we have this resistance here, we're going to have this resistance here. I'm not talking about the top of the wick here. I'm talking about the inside of this channel. Look how well this channel was very strong resistance. We were unable to break it, and we rejected hard. We put in a double bottom market structure. We swept the liquidity below. And remember, guys, I want you guys to remember these sweeps. These sweeps happen both high and low, and they typically are a marker. And it's not 100%, but it plays more often than not. When you see a sweep here on a double bottom, it's usually we're going to go higher. And that's why they sweep the stops. They know they're going to push it higher, so the market makers try to stop people out, because this is a general area where most people are going to put their stops. If it goes below here, I'll just exit the trade. I don't want a lower low to come in and incur more losses. So this is a typical area for stop losses. So they came in, they swept some of those stops, and they pushed higher. Same thing happens to the downside. Here we swept. Here with this wick, we swept it, and what happened? We dropped. And they did the exact reverse here at the bottom. So I have this area, the diagonal, that I want to see break through. Then we have the top of this channel that we were in. This was the channel of the breakout of this 3-week channel. This was the new channel that had formed. We hit the medium line that I talked about as well. We broke through that, found that resistance. And now here, where it becomes kind of the do or die, to be honest with you guys. Again, I'm not trying to be bearish. I'm just trying to give you the technicals. We want to make sure that we break this high. Not only do we break it, we don't want to break it and call it a break during a candle body open. So if the daily candle is up here and there's still 3 hours to go, we can't say, oh yeah, we broke it, we're good. We're going to new swing highs. No, we want to close it. If we close it, is that enough? No. Why? Because it can roll over on the very next candle. When people say confirmation, that means it takes time. I know everyone's in a rush, but remember, the market is not in a hurry, only you are. So we need to find acceptance. We need time for that to happen. We need to show that there's interest in this area here. And how is that shown? By trades. People are trading inside of this area here. They are defending this line. They're trying to move higher. You have sales coming in, feeding the market, maybe unloading. But at the end of the day, those sell orders are not pushing us lower because there's more support in this area here, and we're staying above here. That is acceptance. That is confirmation. Once we have that confirmation, are we going to spring right up? Again, not necessarily. We want to see on the lower time frames some bullish market structures. Typically, when we are going to start moving our next leg, we look for consolidations. We look for a reset of the oscillators. Let me show you something, guys. This is something that you have to pay attention to. You know what? I don't have my tools on here, so I'm going to put my tool set on here because my tool set will have the oscillators that I'm looking at. On these higher time frames, oh, actually, we did reset the. Okay, good. Here was what I was looking for. On the prior videos, I was talking about the MACD. Remember the prior videos where the MACD was here, and I told you guys very unlikely that we're going to be turning around here. Or actually, one of the videos we were here, and I told you guys very unlikely. And we looked back to the left, and we showed the lower highs coming in here, and we kind of were. I told you guys this is a possibility. We're going to do the same thing we did here, and look, that's exactly what we did. I wanted to see a reset. Now, did we reset this the way we have with the... Actually, hold on, guys. Sorry about that. Did we reset this below the medium oscillator like I had talked about? No, we didn't. But you know what? The market is really bullish. This doesn't lead the market. So I'm not as concerned. We are in an area that I'm comfortable with. I wasn't comfortable here. And I wasn't comfortable here. Because again, just a quick recap, look to the left. Remember guys, when you're in doubt, when you want to understand a pattern, all you got to do is look left. When you look left, you kind of understand, you can kind of see the story. Remember this? We talked about this. We talked about this head and shoulders on this MACD. Look the way it played out. See the way we reset every time we have a big move, we reset below here. But it's okay. We haven't gone below. We can still hit the cross signal here and go below. We could, but at the moment, we're looking for upside targets. We've retraced enough, and this could actually come lower on a cool down. Guys, I'm bullish, but it doesn't mean it doesn't mean we're going to go straight up. We're going to cool down, and on a pullback of this move, which will be completely healthy and completely normal, this may pull back into that 0 or below oscillator so that we could get our full true reset the way we normally have. But for now, I'm comfortable. I like this. If we don't get that reset, that retracement right now, we're still in a position where this can potentially cross bull and give us another move to the upside. And that move to the upside will then, like I was mentioning, the consolidation will give us a chance to maybe reset that a little bit lower. But if it doesn't, I'm okay with this. I'm perfectly fine with the MACD, the momentum indicator there on that in that position where it's at. Then we start looking for these upside targets. Now, if you guys have been following my videos, I have made several times a very good case for $48,800 area, and that is the underside of 0.618. 0.618, if you can recall yesterday's video, is the green of my lower high rule. That can very well happen, just like it happened in 2019, even without the black swan. Even without the black swan, look at this, guys. Even without the black swan, we were heading lower. The black swan allowed us to push lower. Hide indicators. So give me 1 second. Here we go. The black swan allowed us, here's the black swan, okay? Here's the black swan. Here's the peak of 2019. Look, we were heading down. We were heading down, and we actually went down. This, we were going up. We were recovering from this downtrend. Black swan came, gave us a great opportunity. We recovered, and we pretty much did what? Look, if you remove this here, look, we just continued up. This here, if you remove this, would have been pretty much right here. We were ready. Right now, the way the market is behaving, the way we're pushing up higher and higher and higher, no real retracements, this is going to come. Don't kid yourself, guys. We are not in a bull run yet. Remember what I called this year. 2021 was still a bull run. 2022 was a bear market. 2023, I call it a recovering market. We're recovering from the bear. We're not quite bull, but we're still technically in a bear until confirmed otherwise. And that confirmation is breaking that lower high rule. The same rule that we use for smaller time frames are applicable to the higher time frames. There's no reason why. If you don't believe so, that's fine. You can analyze the market however you want. But as you can see here, I'm going to just draw this really quick here. Let's see here. Really quick here. Actually, I'm going to use a extended line. Look, we were still in a bear downtrend right here. Still in a bear downtrend, even if you remove this here. And look, until we confirmed and broke out of it, this was the beginning of the bull run. So I just want you guys to have just a realistic expectation and manage those expectations, because if you manage the expectations, you manage your risk. When you have too much euphoria and too much dopamine, you tend to put your risk management to the side because you think it's only going up, we're never going down, and that is not true. Keep a healthy perspective. I'm not trying to be bearish. I'm trying to keep you alert up to the possibilities that until we break 618, until we break this downtrend, we are still in a downtrend, and it's still not technically a bear market, a recovering market, but nevertheless, you may have opportunity to buy lower. Now, if you bought here, did you get liquidated? No. Hopefully you're buying Bitcoin in spot. If you're not a scalper or a day trader, guys, you shouldn't be using leverage. Simple as that. And you shouldn't be using leverage if you don't understand the TA. That's just the way it goes. So for those who are investors who are buying Bitcoin for the next bull run, this stuff like this doesn't really matter to you. You bought up here, it doesn't really matter to you. You know why? Because what? Look, eventually you were made whole again. And then hopefully you were able to keep a healthy perspective on the market so that you can maximize these moves here. And the market came and gave you a second chance. The market came and gave you a second chance. Unfortunately, when you don't keep a healthy respect and an outlook on the market, perspective on the market, you hold all the way back down. So let's see if we can locally right now, move here. I'm going to show you some on-chain data as well. Let's see what resolves here. When we resolve this here, I will update you guys on the outcome, because I don't know. I don't know what's going to happen. I'm not smart enough to guess where it's going to go. All I can do is look at the levels and look for the invalidations and validations, and then go from there. On-chain data, you can see. Let me see here. Let me show you the heat map. On-chain data still stands as far as, look at this, guys. Look at the way we cleared them out. So I'm going to show you something, guys, but I don't want you to start aping in, okay? Don't want you to start aping in, and I'll explain to you why. We came in, look, we just blasted through all this. You know what's a better view? A 7-day look back, a 7-day back look. Look back. I don't know. I don't even. That's not how you say it. Again, bear with me. I've very little sleep. 7-day back look back. What the hell am I saying? Let's see here. We're going to go look at the 7-day. Okay. I wanted the 7-day because basically what this does, this looks back 7 days, and it kind of gives you a good a perspective of how they chase this heat. And remember, this heat is dollar signs to them. The stronger the heat, the more money is up for grabs. And look at the way the price action just gravitates to it, because they're pushing it that way, because they want to take people's money. Now, why did I show you this? Because locally, if you look at the 12-hour time frame, what do we have? We've got a lot of heat here, a lot of heat towards the downside. Does this mean I want you to start aping in on shorts? No, because what will happen if you start aping in on shorts, you will start creating heat up here. And what are they going to do? They're going to go, the heat is closer here than it is here. If you start building up this heat here, they're going to come up and grab it. And that's what's been happening. Every time they push up to grab that heat, people think they're smarter in the market. They ape in on shorts, creates heat up here. They go higher and they have to climb higher and higher. And we've been just climbing. Look, the market was going to come down. Look at here. Actually, I hate that that little box comes up, but look, there was no heat here. No heat here. I know it's difficult to, well, I can't turn off those boxes. So, and as it's going down, you see this blue line starting to form. Those are orders. Those are orders. And the market maker's like, oh my God, these people don't stop. And look, they get more and more intense. So what do? They came and took it out. Look at that. They came and took it out. And then they cleared it. They cleared the books for a little bit. And then as it's dropping, what's going on here with the heat? Look, it continues to build. The more we drop, the brighter it gets. See, look, even more it's building up here. So this heat is not as intense as down here. So eventually we're going to come down and we're going to knock this out. But you want to also keep in mind that these numbers, this heat here falls within our fibs. At the moment, they fall within our continuation fib. So it doesn't mean that we're going to go down and we're going to go down to 25,000 and we're going to retest that. No, not at all. Not yet. The market isn't showing us that. So until the market shows us that, we can't assume that our next stop is 25,000. You may want 25,000, but it doesn't mean that's what the market's going to give you. I just want you to, again, keep a healthy perspective of what's going on. When you see this and you understand this, you're not panicking. You're not like, oh my God, I'm going to go all in on this short. No, they're just dropping it for a couple of things. We look at the way we ran. You can't expect, where's our chart? Which one's our chart? This one's our chart. You can't expect this to just go one straight line. I mean, this alone is impressive. We need a bit of a pullback. So let's see where this lands, and then we'll do our fib line. Like I told you, the confluence is here at 30,400. One market structure of a double bottom, which I call a W, ends at the left side of the W. That's typically where it ends. That lines up to 30,400. That's reason number one. Confluence to that, spot. Spot has sell walls right at, look at that, right at the end of that W, at the beginning of that W, which would end that W at 30,400. So we've got some confluence, and we've got some pretty compelling confluence that's going to be an area of resistance. Does it mean that it cannot go higher? No, it can. And that's why they put stops in place. That's why they put walls in place in case it goes higher. They want to make sure that they keep the FOMO at a respectable level. And look at the way they put this next wall. Look at the wick here. This is no coincidence, guys. No coincidence. They put that wall right there to do what? To do the same thing they did here. So if anybody wants to hunt any stops like they did there, what do? They're going to face that same wall up there. That wall's pretty big too. So, and what did we do here when we hit this, when we swept for the stops? We came down. I'm expecting us to come down, but only to a flag pattern. I call this market structure, guys. We play it a lot on my Discord. We call it W flag breakout. I've mentioned it before. Basically, we have a W, then we have a flag, then we have a breakout. This is what I'm expecting. Nothing tells me that we're going to go test 25,000. Not even the increased heat at 25,000 here on spot. All this tells me is that's where they want to support it. They want to support at 25,425, 25,450. And if it goes, they turned it off. Oh, wow. Okay. They turned it off at 23. And if it goes a little bit below at this one, right at 25,000, they have another wall there. This doesn't mean that it's going to, that once we complete this pattern, we're going straight there. Not at all. Not at all. Until this market structure gets invalidated, then we then have one more stop. We got to look at these lows. If these lows get invalidated, then we can talk about these targets in here and this support and this cushion that the whales have put in place so they can capture. Basically, everybody wants to buy here. What happens when everybody wants to buy? Do we get what everybody wants? No, not necessarily, not typically. So again, guys, just having a healthy perspective of what's going on with the market is going to help you to make the right decisions and curb that euphoria, curb the dopamine, and make more educated decisions based on the technicals and confluence with what's moving the market right now. There's a lot of evidence pointing to derivatives moving the market, not spot. Spot is normally, in a bull run, spot controls moves and controls the price action. In bear markets, in recovering markets, it's the derivatives. So until that changes, there's no reason to believe any different. So you need to pay attention to that derivatives data so they can give you, again, a good idea of where the contracts are, the liquidation contracts are in place, where the market makers are positioned to make the most amount of money. And then when you incorporate your TA, you start developing a good thesis of what happens in the local. Now, guys, this is all for day traders and for scalpers and day traders. It's not for long-term investors. This shouldn't matter. You should not be listening to me. If you're a long-term investor, don't even listen to me. But you can follow me, but there's no reason to listen to all of this here. This doesn't apply to you. You're not selling here. You're not buying here. You're buying and you keep on buying. Every time it dips, every time it goes down here, you buy. Every time it dips here, you buy. And you hold and you wait. And when we get lucky enough to buy it at 15, if we ever get there, you buy again. Simple as that. This is more toward technical analysis. People who want to learn technical analysis, people who want to try day trading. And I'm going to touch on this before I end the video. Everyone wants to quit their jobs in a bull run. Everyone. Please be careful with that. Because in a bull run, everyone's a genius. And just because you 10x the meme coin doesn't make you a trader at all. Everyone is a trader in a bull run. You want to survive? You want to quit your job? Yeah, go ahead, do it. But do this first. 2 years. See if you can make money on the side while you're working for 2 years, and you're making double of what your wages are. If you can manage to do that through a bear market, not a bull market, the 2 years, 18 months that we normally have after a bull run, if you can stay consistent and make money during that period, then you can consider quitting your job. But until then, guys, right now you should just be preparing yourself, understanding technical analysis. The bull run is going to help you sharpen those what you learned in a bear market, and then in a bear market, you're going to be able to test your tools, test your theory. Can you make money through a bear market? If the answer is yes, then you can go ahead and talk to your family, talk to your wife, talk to your spouse, your partner, and find out if they support you on this and if it's going to work for you. All right, guys, have a good day.